The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And we got all sorts of things going on today. Got a massive gap down on the indices there. And we got the, right now they doing a little bit of a pullback. And why? Well, we talked about this last week. The Fed is pumping it up, okay? And I'm not talking about the $85 billion. Okay, I'm not even talking about the $50 billion in addition to that last week. $58 billion more today. Okay, that puts us over $100 billion in the last 6 days on top of the $85 billion they're normally doing. So they're using the temporary open market operation as something that really nobody's even looking at. Okay, this is insane. $58 billion in a single day. Look at that right there. Submitted. Accepted, $58.157 billion. Wow. So, yeah, I mean, I couldn't believe when I saw the number. So that was more than all last week combined, okay? That's more than, actually, Fridays was more than last month. Okay, Fridays was more than August. But then today is more than last week. And I think the last, 6 days or whatever, maybe the most, everything total. If we add up all of them. And so I'm going back. I'm actually pulling all of them, and I'm working with Steven, another trader. He's helping me out, helping put all this together. But just some amazing amount of bond buying. And this is the ultimate prop, okay? And I would not call it so much a pump up the market as try to slow down a crash. What usually happens in October, or what, the crashes usually, when they do happen, they happen in October. Think flash crash, think, Black Monday, on down the list. And, you could have every, there's going to be Black Mondays, Black Fridays, Tuesday, Wednesday, Thursdays if they keep this stuff going, right? So, all these crashes, and, of course, we got a flash crash, we got 2008 October crash, everything. And, question comes in, how deep can their pockets be? It's infinite, okay? So they're going in with these little repos and just boom, 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 just knocking at it. And they have the authority just to right away. And they're doing it. So apparently they're showing that there is no limit. And again, $58 billion in a day. And the last time we saw anything even close to this was back in 2007, right before the final tippity top high. And, of course, we know what's going on. We got this big government shutdown looming. And people are like, they'll solve it. They'll definitely solve it. And I don't know, man. Both sides seem to be like, whatever. You got the Republicans working through the weekend, the GOP, and they're like, hey, Obama's out playing golf. We're here till 1 a.m. Senate, doors aren't even open. They'll show up here in about an hour. They're going to get to work and see if they want to put something together before midnight. If not, over 800,000 people not being able to go to work tomorrow, soldiers' paychecks getting delayed. I mean, just on down the list, there's a lot of stuff that's going to be happening, at least within the next 2 weeks. So, because not only do we have this, but we also have the debt ceiling, which we're supposed to run out by the 17th of October. So, literally, just, a lot going on, and just be careful, because this isn't even, you're not even playing simply the market. This isn't market movers and market makers and institutions. I mean, this is the Fed doing, now we're sort of getting used to the Fed, right? That's just part of trading now. But this is not the Fed being the Fed. This is something else. This is like a whole nother, Fed times 2 or 3 coming in the door. And, anyways, but, yep. And so looking on over here, let's check out where all the markets are. We got the S&P right now. It's down 9 points. We have the NASDAQ down 5.5. We have the Russell down 1.4 and the Dow down 114 points. And that's good compared to where it's been. We got gold right now down 7 points. We got silver pushing on down close to 0.5%. We got copper right now. It's pretty flat on the day. Small move there. We got oil down $1.08 right now. 1% down move on oil. We have natural gas currently down $1.40. 1.4%. Pardon me. We got let's see. Got corn is down $10 on the day. We got soybeans down $33. Euro dollar is currently up a mere 6 pips in the middle of all this. We got pound dollar up 57, Aussie dollar up 19, and euro yen up 8. The U.S. yen as well is pretty flat on the day. We got pound yen up 50 pips right now. We got the dollar CAD up 10 and the dollar franc down 14. But just a lot of volatility, and be ready for it because they're coming in session here in an hour. And the news things, true or false or inaccurate or, just repiping of the same information with a couple new twists, whatever, is going to start flying out. And anyways, it's going to be an interesting 24 hours. And might want to check out something like Nadex and at least define that risk, okay? So again, define your risk on Nadex, and use Nadex to hedge and a lot of other things that you can do with it. But check out TFNN.com. Go ahead and click on the Nadex banner on the top right side. You can play, gold, oil, the S&P, the Dow, euro, dollar, on down the list, using the spreads to trade like you're trading the underlying, but at least have defined risk. Because you never know what announcement's going to come out next. They may come out and say resolved, right? Not really expecting that. They may come out and say resolved, and boom, things fly up. Or tick, tick, tock, nothing's happening, boom, flies down. They're going to bank on they can pull another, 95, 96, Clinton era shutdown, and they think it'll be better this time because of just the market situations. It'll work out better for both parties. Of course, we have to assume that it's going to work out better for them than it did last time, or at least I guess the Democrats think it'll work out better for them. But this is a whole different situation. This isn't a second-term election. Second-term election is done, okay? Unlike last time with Clinton getting back in. And this is not during the middle of the internet boom. This is during the middle of the financial crisis. So this is a totally different scenario. So don't let anybody tell you, this is the same thing happened back in the mid-'90s, and it happened before, and they shut down, for almost a month there, and it hurt this party and it helped this party, and da-da-da. This is not the same scenario. Middle of a financial crisis, the Fed is pumping like crazy, okay, and you got very extreme ideologies on both sides, and not that hasn't always happened, but even to more of an extreme right now. And it's not just rein in spending, and again, it's not during the middle of an internet boom. It's the exact opposite. It's more of a Fed boom, I guess you could say. But you have, before it was about reining in spending, this is not simply about spending. It's not simply about budget policy. This is a fight over, obviously, the health care. And the Republicans came back and they said, hey, you know what? Let's just bump it out a year. Everybody says the thing's not ready anyway. They say all the exchanges are messed up. They say that the customer service reps aren't ready. On down the list, this thing is not ready to roll out, by the way, tomorrow. Okay? Let's just bump it out a year. We'll agree. We'll keep everything running. We're not saying defund it, kill it, whatever. We're just saying bump it out a year. Of course, that'd be part of their game. Gives them another year to try to hurt it. But they, Democrats know that as well. And so, but that's the battle. And so it's a battle on the mindset of the future of the country, not just the budgetary policy of the country. And so, it's, we're going to see some extreme stuff, and just be ready. So, again, click on that Nadex banner on the right side, TFNN. Go ahead and click under, to get a demo account, you can click on demo trading account, fill in a username, first name, last name, phone number, and email address, and click apply for a demo. And you'll be able to get that going. And then right over here, go to trading platform, and they'll tell you all about it, show you all the different features and everything. But you can get mobile trading. You can log in right away. It takes about 15 seconds. And then click on create account. And under create account, go from start to funded in about 10 minutes. And that will get you going. It's only about 10 minutes to get funded, and you can, maybe even 5 minutes, depending on how fast or slow you type. But and you can get in there and maybe even hedge off some positions if you need to by using the Nadex spreads. And if you haven't tried out hedging and seeing what all that's about, it's pretty simple. We just pull up something like the box spread scanner, and I'll go in and say pull up the S&P, and then I'll try to find a lower risk S&P contract if I can find one, or let's say you're doing euro dollar, we'll try that. You can find different contracts. You can trade this all across the board. But if you're trading, say, the euro dollar, you find one that's a lower risk trade, and you're going into the trade. You just want to put on a little bit of protection in the middle of some of your trades. So like right now, you could get a trade on, and you basically give up like 7 pips, okay? And you'd actually only have 4 pips of risk. If I went in right now and I sold the euro dollar, okay, and I bought the this contract right here. So if I say I sold that, like I sold the spot dollar, okay, and then I bought the euro dollar right here, this euro dollar spread, this 35.30 to 33.630. My risk is basically the difference between the two. So you're talking about 5 pips of risk, okay? So if I sold this one at 35.33 and bought this one at 35.38, that'd be 5 pips of risk. Maximum was $7 that I need to make on this sell side to make back the loss on the spread, but only 5 pips would be my net loss between the two at expiration. That's the most I could lose. And it allows me to have a little extra hedge. So as some of these news reports are coming out, you get a little bit nervous. Markets sort of moving to look like it might reverse. You see a major support line, resistance line, but your system's telling you to keep going short or keep going long. Throw on these hedges, okay? They will make a massive difference in your trading. And, you can just trade this. The benefit of trading the longer term, the spot or like the master spread or, an end-of-day expiration spread is that it will cut down, okay? It'll cut down on your risk. But you won't be paying for the premium to the end of the day because you don't really need premium all day long, okay? So, usually I don't know about you, but I take a trade, usually I expect it to, move in the next, few minutes, maybe 30 minutes at the most, but I expect it to move. And you can do this over on the Dow. You can do it, across the board. There's tons of markets where you can hop in and you can hedge off. It depends upon how much of a hedge you want to have and where the markets are at, what spreads are there. And every hour, new spreads come out. So if you haven't tried that out, hop on over here and just create an account, get it going, and then on the TFNN homepage, just go here and check out the bot spread scanner. Right down here, you'll see all the different things that TFNN offers, which they have a lot of great tools for you to offer. But if you're looking for a great risk management strategy, or if you're looking for some ways to do some short-term trading, 5 minutes, 10 minutes, 1 day, okay, but you want to do defined risk, but you still want the massive leverage, okay, and you still want that delta, like blowing through 1 right there, right? You don't want to deal with options that have a week till expiration, they move slow. Then you can go over here, Diagnostic Trading, click on that. You're going to get access to the scanner, you're going to get access to the education, you're going to have access to ask me questions, and I'd be glad to help you out in any way that I can. Of course, you can always call in the show, and I'll be glad to help you out on here as well. All right, so let's see what else we got going on. We got some news coming up this week. We had a little bit of news come out this morning, and news we had this morning was on the dollar CAD. So let me get a chart up for you, and we'll talk about that when we get back and talk about what's coming up this week, or maybe not coming up this week, depending upon what happens with Congress. Stay right there. We'll be right back after the break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. So right now, just looking over and checking out what kind of news and everything we got going on that we might be able to take advantage of this coming week. The issue is there may be some news that we can't take advantage of because it may not even happen. That's right, it may not happen. Such as the employment numbers coming out this Friday may not be released if the government shuts down. Now, Obama could go and basically authorize a few temporary personnel to come in and work and get the work done in order to release the number, which, you think they'd have it already, but in reality, they may not have the number released on Friday. So that'd definitely be an interesting event. So, anyways, let's go ahead and check out where we are on news, what's coming on up. By the way, the market, after doing a move down pretty much all night long, had that gap and just sort of oscillated flat, did one nice spike right down at the open, pushed on up. Check out what we just got. We just got this big volume spike. Big volume spike right there. So is that the big boys calling it the day? And right here, let's go ahead and let's put some little arrows right there and let's see what we got going on. Does this line up across the indices? Are we seeing this across the board? See that big volume spike that just took place right there? So they may be wiping it out, calling it a day, and saying, okay, no more positions until we figure out what's really happening with this thing. It's good. Let's look at the Russell. See if we're seeing a similar volume spike, and we got to zoom in a little bit more on it to really be able to see it because the volume is so much lighter. There we go. And we got I guess you could call that a volume spike. See, there we go. Yeah, we got a volume spike. It's just harder to see on the Russell. But right there, we did get another volume spike as well, the exact same time. Okay? If we go over here, let's scroll on over, let's check out the Nasdaq. Let's see if it's clear in all four of the indices. And, yep, got the same spike right there. By the way, on Nasdaq, right as it closed, it actually went back and hit settlement, filled the gap. So, impressive performance right there by the Nasdaq, going down to one deviation, giving a big spike in the morning, and then perfect one deviation, bounce right on up to settlement. And again, volume spike as the Nasdaq hits its settlement price and fills the gap from that massive move. And let's go ahead and move on down. Let's check out the Dow. So here on the Dow, we can also see this large spike happening. Exact same place. Of course, not getting the move all the way up to settlement on the other three indices. We still got the broad market index around negative 900 right now. It's been trending up most of the morning. Let me show you that right here. So most this morning right here, this is today. You can see the big gap down on the market and very negative, but then started moving on up. And then a lot of sideways activity really since about 1040. But then you got one spike. We saw that spike just now on all the indices before it looks like it may be pulling on back down. And so based on just the volume analysis, I would say that, get ready for the market to either reverse or just go flat while they're waiting to see if anything comes out of the Senate with what's coming on out of the market. All right, well, with that in place, let's go ahead and let's check out the dollar CAD and the reports that we had out there on dollar CAD that we can take advantage of. Like I said, today it came out. Let's see, let's look at the number. The GDP came out at 0.6, had an expectation of 0.6. Pretty flat trade. Easily could have been break even on that trade. Also, you actually would have been profitable just because of the move that's happening right now with all the news. And depending on exactly what time you got in. So again, the news report came out at 8:30. And let's look at the high to low on this. So right here. Okay. So we got to move down here. So only 13 pips, not much. Okay. And then basically move up to at this point right here, about 21 pips. So you would have had a chance to get out at break even on the trade when you saw it came in at nothing. However, that's if you got in like 5 minutes before. A lot of times we're hopping in these trades like around 8. So that would actually give you a little more profitability to be able to get out equally on both sides at break even. Really not just the best trade out there, but still a pretty cheap trade nevertheless. And would have worked out okay. It's not one of my favorite trades. It has a pretty low probability of breaking that 50 pips, like 43%. When it does break it, it breaks it by 60 pips. So basically the actual average high to low, which means it breaks it by a lot more, the average high to low is 60 pips on the USD CAD whenever their GDP is released. But only, like I said, 40-something% of the time will it actually break 50 pips. So therefore, it's one of those trades that you're going to be really not surprised if you have to end up getting out at break even on the trade. And let me show you this right here. Steven just helped me put all this together. We've just been, it's just, amazing what they're doing right here with the bonds. So just to give you a visual view of this, I'll put this up here. Check that out. So we got 58 billion today, 56 billion last week. And basically, if you combine everything else together, you're looking at like 25 billion in the last 18 months before that. So, just major pump. Look at that one bar right up there. Call that a volume spike, right? All right, we'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. All right, so just going over, like I said, some of the news trades that are coming up this week and talking about the Fed funds. How that, and also how the government shutdown may mess up the news this week, as if the government does shut down, they may or may not actually be releasing the employment data numbers on Friday. All right, so what else do we got this week? Because we do have a few more things you're going to want to be aware of. So as usual, there we got, let's see, we're going to have the cash rate, the RBA statement coming out tonight. Usually not a massive mover unless there is a large expectation of movement. But again, that comes out tonight at 12:30 Eastern Time, okay? So be ready for that one. If you are an Aussie trader, should give you some nice volatility, but not just like basically not a, if they don't raise it, then that gives it a little strength. If they do raise, or if they do lower the interest rate, that weakens the Aussie. So pretty much how you play that trade. There's not a whole lot more to it than that. Just expect the volatility. Okay, so also we're going to have Australian retail sales. That's coming out tonight. Pretty small mover, not the biggest thing to be aware of. Again, that's 9:30 this evening. And the stats for you on that, I mean, it usually, like 20% of the time, it breaks 50 pips. So it comes out at 9:30. You don't really have a perfect butterfly going before it. You might be able to butterfly into it, because like I said, the average range high to low in the thing is 36 pips. And so you might be able to choose, like, say, an 11 o'clock binary butterfly if you wanted to. And as long as you can get one, say, that wide. So you'd have to be getting into it pretty soon. and might be a little dangerous to do with all the news coming out tonight. So my suggestion on that trade would be either follow the chart or don't trade it. I wouldn't necessarily go with a breakout trade, and I wouldn't go with a range-bound trade. I would just go with the trend, wherever that's going, on Aussie retail sales and on the rate statement. The rate statement, 67% of the time does break 50 picks, but the average is 45. What does that mean? That means when it explodes, okay, when it goes, like, it'll almost always break 50, except for a lot of times, times that it doesn't move at all. It moves like 10 or 15. So that's why you get that really low range of 45 pips, even though the majority of the time it breaks 50 pips. So a very difficult trade right there in and of itself, but just one to be aware of. All right, let's see. What else do we got? We're going to have, trying to see some, China's going to be on a bank holiday. They're on bank holiday tomorrow as well. Britain's going to have their manufacturing PMI, and the U.S. is going to have the ISM manufacturing PMI. So let's go ahead. Let's look at the stats on those. May have a couple trades that you can take advantage of tomorrow. So let's see. Okay, so Britain's manufacturing PMI comes out it's actually released at 428 if you have the Reuters subscription, if you're one of the privileged people that get that. If not, you're going to get it at 430. So just be aware of some volatility about 2 minutes previous to that actual announcement. And let's see, the biggest movers on it are pound yen, pound dollar. Pound yen would be the more consistent large mover. So if you're picking a pair for a breakout strategy, it's definitely going to be pound yen. Looks like it's about 67% or so. It breaks 50 pips, and 70 pips is the average range high to low on it. And it has an insane amount of volatility before it as well, like 70 pips high to low leading up to it. So it is a very, very volatile announcement coming out. So just be aware of that one. So ought to be a nice trade. So like I said, 67% of the time breaking 50 pips with the average range of 72. So if we get any kind of divergence from the announcement, we're looking for an expectation to come out 57.5. So let's say we come in and we get like a basically add or subtract 2 points to that. Okay, so if we get 59.5 or 55.5, we got to get a massive move off of it. If we get a small move, just watch it and see if it's going with it. You control it, and if not, if you see it just coming in at the number, then just go for your break even, get out of the trade. Okay. Now, if we go over to the USM ISM manufacturing PMI, there's only a couple pairs that actually consistently break. That's euro dollar, pound dollar. Euro dollar is going to be your probably top choice. Out of that, 71, a little over 70% of the time right there, you're going to be getting a 50 pip or higher breakout on the euro dollar. And again, that is going to be on the US ISM manufacturing PMI coming out at 10 a.m. tomorrow. And so with that, you get an average range of 61 pips. So that's the best trade setup I've seen so far for the week right there. So put that one on your books. Also, you have plenty of butterfly opportunities since it is a 10 a.m. release. You can butterfly almost all the pairs. Most of them have around a 15 to 25 pip range. So like Aussie dollar 30 minutes before is like a 15 pip range. And, add about 5 pips for every half hour. Okay? So Aussie dollar 15, euro dollar 20, pound dollar 25, dollar CAD 20, dollar franc 20, dollar yen 15. So that's 30 minutes before. Just add about 5 pips for the 60-minute mark and the 90-minute mark, and you'll basically have the stats on how high to low to make a binary butterfly on these trades. Once you have those pieces in check, let's see what else we have that might be some tradable events that basically wraps up Tuesday. If we take it on over and let's look at Wednesday and see what we have potentially that you might be able to do on Wednesday. We're going to have the EU ECB interest rate. We should have obviously, it's not a government issue because it's ADP, private sector based, the US ADP, NFP pay employment, and the ECB press conference. One thing to always remember when the interest rate statement comes out, the big mover, unless there's a surprise on the interest rate, the big move is on the press conference, okay? Press conference comes out at 8:30. The ECB interest rate comes out at 7:45 a.m. So you could possibly hop in earlier, maybe on like an 11 o'clock binary or spread, 11 a.m. expirations that you might be able to take advantage of there. So you could hop in like at 7:30, or you could just wait until 8 a.m. and pay less for it. The only way you'd basically be out the trade is if the big move happened on the interest rate, and you still may get the volatility. But that's the press conference is really the big piece. And the moves on that are huge. So let's see, what do we got on both of these, on the ADP, NFP, and the press conference, both happening, back to back there. The ADP one, the moves are, let's see here. Actually, let's go in first to the ECB interest rate, because that's the big mover. If we do get the moves that we're looking for, and that's going to be, again, off of the interest rate announcement itself, off the rate conference itself, okay? And remember, we don't really have, how do you put this? You don't really have the stats simply off of a press conference, because it's going to be numbers based. But the easiest one is simply euro dollar. Okay? So what I do is I go and I pull the stats on how far does it move when this happens. And it's not a deviation because it's a press conference, right? So approximately almost 85% of the time it breaks 50 pips with an average range of 78 pips from high to low when this press conference comes out right after the rate statement. So you have a lot of movement. You'll probably have a decent amount of volatility. Just be aware of that. That's going to put a little more price in there. But you do have the expected higher range movement to go along with it. So that balances it out. But again, that's about an 85% probability of it breaking 50 pips with about an 80 pip range high to low right there on the euro dollar. So you ought to be able to go in and put up a decent amount of risk, $50 or less, but it'll hop in and grab a 1-to-1 risk reward on that trade and take your profit and run. So, anyways, a really good trade, simple trade, takes a very short period of time, and, when the press conference comes out, there's plenty of information. They have the press conference, Draghi issues his official statement, and, occasionally there is a surprise that they do decide to cut the interest rates. So, just be aware that you are watching that if that's happened when that report comes out. ADP and FP hasn't been the biggest mover overall. You're looking at euro dollars like 55% of the time. It moves 60 pips. I honestly wouldn't even be looking to play the ADP and FP right now. I'd be focusing on the euro dollar press conference. And if you get in before the ADP and FP, like around 8 o'clock, then you'll get the benefit of either one of them rocking the market and making it move. Okay? So like I said, I wouldn't make my focus on that. I'd just be aware of it. So I probably got in before it. So if there was some major volatility from the ADP and FP report, then I could take advantage of it. Okay? Let's see here. What else do we have? That's the ECB interest rate, the NFP, and the ECB press rate conference. All right, and then let's see. We're going to be wrapping up our week. These are all the major reports I'm going over. We got the UK Services PMI. We're going to have the U.S. ISM non-manufacturing, and, of course, the U.S. non-farm payroll numbers coming out at the end of the week. So UK Services PMI, it's a decent report. You're getting, a little over 50% of the time. It's breaking 50 pips. So it's sort of like you definitely want the 1-to-1. But we're going for 1-to-1. But the average move, okay, is 74 pips on the pound yen and 60 pips on the pound dollar. So the probability of you hitting it just on the average range is actually decent. Anyway, so that one is going to be happening again on October 3rd, okay? And so you can take advantage of that one. And what else? We got the U.S. ISM non-manufacturing PMI. That one right there, you can go in and not the best out of the group. So again, it could be a pound dollar trade. It could be 50%, about a 60 pip range move. So pretty similar, reports. And again, pound dollar being the preferred pair on this trade as well, same day. So you might even decide to go a little longer trade. Maybe you decide to do an 11 a.m. and take advantage of both of those massive moves and see if they push both in the same direction. Maybe choose like an 11 a.m. expiration on a 24-hour binary and doing a strangle. That's one way to play it, okay? Or you could also try to straddle them. Again, not the biggest breakout movers right there. And, of course, the big one is going to be the non-farm payroll and, the unemployment rate coming out, looking at 7.3%. And being at that rate, a couple announcements have come out saying, hey, there's really no chance of widening up on QE as long as we got a 7% plus unemployment rate. Well, the numbers come out. This is the biggest mover, okay? Massive mover. If we get the report, massive mover. Euro dollar literally has broken 50 pips like every time in the last 2 years. The average range is over 100 pips. Okay, pound dollar, not quite as good, but still excellent. So over 85% of the time breaks 50 pips, over 100 pip move. Dollar franc, same stats, over 85% there on the dollar franc, 108 pip moves. Actually, the largest move of all the currencies is actually the dollar franc, with the most consistency at breaking 50 pips being the euro dollar. So, but euro dollar, pound dollar, dollar franc, those are going to be sort of your three biggest bets. The other ones all have a 65% or higher probability of breaking 50 pips. Let's see, we got the Aussie dollar has over 80% probability, 60 pip high to low. We got the dollar CAD with a 70% probability, 75 pips high to low. We got the dollar yen with over 65% probability of breaking 50 pips, 81 pips high to low. So all those are great. Euro dollar, pound dollar, dollar franc probably being your three preferreds just because they move the furthest and have a lot of range in there. And, of course, these are all going to be more expensive. There's a big expectation. There's gonna, it's just going to be a more expensive time to trade. There'll be more implied volatility built into the contracts themselves, okay? So be aware of that. But that is the majority of the market wrap for the week of what we see coming up. Now, there'll be some other small things that'll be coming out. Aussie dollars had like trade balance report. There's a construction PMI, and Euro's going to have its minimum bid rate. We talked about that. I'm trying to see if there's any small things. Bernanke is going to come out and do a speech. Be aware of that one on Wednesday at 3:30. Okay, so just any comments that come out of that could affect the market. You'll also have China again closed on Wednesday and Thursday. Germany will be closed on Thursday. So let's see, a lot of PMI reports. We're going to have Italian, Spanish, and Britain coming out. French and Spanish bond auctions coming out sometime on Thursday as well. So beware if those come in poorly. That could have a massive impact on the euro. And let's see here. Japan's going to release a monetary policy statement sometime on Thursday. So it's a tentative. And then they'll also have a press conference. And we got IVPMI coming out of Canada at 10 a.m. Potentially a butterfly trade after all the noise is out from the unemployment rate. So just something you could look at doing right there. But be careful. It all depends on how that employment number comes out or if it comes out at all. All coming back to what's the government going to do. So we'll find out, I guess, by tonight at midnight we'll find something out. So one way or the other, right? And maybe we'll get a 24-hour extension or who knows what we're going to get. But they've been extending like crazy. They've been pretty good about pulling off extensions at the last minute. About doing their job, not so much, but, one side against the other and both trying to make sure they're making each side of their constituents happy. So, all right, let's look at where we got all the markets right now. We got the dollar CAD down 0.7 right there, and then moving on back up. Let's go ahead and check out the Aussie. What's the Aussie been doing today with all this noise? Well, we got this, a little bit, not really a big gap on it, but it moved on down to 0.5, on up to 0.5, gives us a solid deviation, low to high. And so no surprise there. It starts bouncing off the 0.5 level as, again, it came off the 0.5. It's real easy to lose that perspective and forget about that because you're in here, you're just focusing on the chart. You see this movement. I mean, this is your chart, right? You're watching this. And let me sort of show you what I'm talking about. We've all been there. So right here, but this is the chart that you see. You see up, 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 and away. You don't notice, and this is one of my favorite things about deviations, is the perspective. Okay, it's at 0.5. It was at 0.5, which means from low to high, it's went a deviation. Expect it to pull back. This is why we start using trailing stops on the deviations when they close above the bars. We'll go ahead. Let's scroll on down. Let's look at the euro. The euro right here, we had a move down to 0.5, on up to 0.5, again, a one deviation. And look at that. Perfect pullback. Keep that perspective. Notice when it hits that full deviation mark, even if it's a 0.5 and a 0.5 together. All right, stay right there, and we'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position, subscribers sold recently for plus 42% on parts and plus 64% on rest. Had Hertz Global as a core position for 6 months. A current position, entered as a turnaround company, is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Back here to the Diagnostic Trading Hour, and this is Darrell Martin right here on TFNN. And so we're just checking out sort of the market volatility, where everything's been at right now. Everybody's waiting to see what's going to happen here, since it's about to come back in session in about 6 minutes. And not like a news report exactly in and of itself, but I'm sure news reports are going to start flying out. Send it back in session. Here's what's being said as people are walking up the stairs, all that stuff. So you're going to be starting to get bombarded with that. But do I want to take a position right before this comes out? Anyway, so we got the dollar CAD there. Let's go ahead and check out. We got the euro dollar wrapped up. Yeah, so we talked about the dollar CAD already. We went through that one. Went on down. Didn't really bounce back up, but notice it was about 0.3 up and about 0.7 down. Okay, again, check out those full deviations from high to low. All right, so we go dollar CAD right there. Let's check out the dollar franc. So dollar franc right here, we got to move down to about 0.7 and pulling back up off that level at the moment and sitting right down between 0.5 and settlement. On dollar yen, we're looking on over, seeing it move all the way, just a massive gap down, a huge gap on dollar yen. It basically gapped down a deviation, pulled back another half, went right back to the 1 deviation mark, the expected movement built into the option pricing. That's why these are so accurate. It pulls right back on up to settlement. Dollar yen showing some strength still. We go on down. Let's look at where we're at on our energies. We got oil right now. Oil has moved on down. Did a little pullback right now, 102.20. And so looks like it's experiencing a little resistance right there at the moment. It gapped down as well with everything else, but pulled down to 1 deviation perfectly before it did a pullback, and now it's just sitting right there at right around 102.20. And let's go in and look at a couple of our other markets. We can check out where gold is right now on the day. And on gold, we saw a move on down, almost to one deviation, but definitely a one deviation from high to low before it pulled back. And really, we're just getting some oscillation at the moment between 0.5 and 0.7. But gold currently being down on the day. And let's see, we go into silver. Check out the moves here. A lot of increased implied volatility being built into silver today. Not hitting its half deviation, but a much larger than normal half deviation, just due to increased implied volatility with everything that's going on with the the Congress stuff and everything else. And let's go ahead and check out our ags. We got corn right now, and corn is looks like it moved. Look at this. This is just a beautiful chart. Okay, if you haven't looked at it, you need to look at it. I encourage people all the time, check out the ags. Check them out on Nadex so you have defined risk, okay, because they're little nuts. But, man, they move. They really move. And you got to move up to one deviation on corn, and then a move down to negative 1.5. That's a 2.5 deviation move down, basically to the tick to 1, and then down to the tick at 1.5. Sort of come back up to that -1 deviation. It's like it's going to settle right out around there. But, beautiful move. This, getting this move down right here, that would have been really tough, okay? You could have got the up move. Now, when it did the little, push down right here, this is where you got a little notice, hey, you've got a short move coming, that you could have grabbed it. So, not that you could have grabbed this unless you're just perfectly polling what? What could you have based that on if you want to do a fade or a hedge or a double hedge, okay? Something I've been playing with a lot is a double hedge where I'll go in and I'm going long, and then we're at a one deviation. If I can throw on a double hedge really cheap, I might throw a double hedge on there, and so if it goes down, then I actually make money. If it goes up, I give up a little bit of my profit, but I still have the chance to be profitable on the trade and continue capturing profit. It does continue to rise. But anyway, this thing goes down, boom, you go in, you grab that, you grab a nice long short. Even if you didn't catch it there and you caught it here, you still got a nice short. So just a great move right there on corn. Rolling on over to soybeans. On soybeans, we can see some, we didn't get that massive up move, but you got a pure, nice, perfect, sweet little down trend, all the way down to 1.5 deviations on soybeans, along with that gap. Basically gap down almost half a deviation in and of itself. But there's some great moves on the ags. Despite all the stuff going on with Congress, the ags are where it was at today. Anyways, hope you all are having a great day, a safe day. Be careful. Check out Nadex. I will see you tomorrow right here on the Diagnostic Trading Hour. And stay tuned. We have another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.